I ranked some of the best stocks in the market to trade right now, and one of them is really going to surprise you. The first one, AppLovin Corporation. So all of these stocks, every single one was brought to me by the community on live stream. So I just want to preface that before I get going. So here we go. Now, looking at this, what's the first thing that we always look for when we're looking at a stock to go long or to go short? For those of you that are new, I'm going to give you that answer. It's you focus on the trend, because what's the idea behind this? Well, if we're looking at something, let's say AppLovin, we need to know, are we going to go long or are we going to go short on this? Because right now you can see the trend overall on the long-term chart is coming down. We wouldn't want to go long on this. Even though the stock price over several days is going up, with the exception of today, it doesn't mean that you just buy it. Now, if you wanted to, and the great thing about these shorts right now, all of them are shorts, by the way. The great thing about these shorts is that they're mostly all in a snapback. So how can you play this if you want to go long on it? Well, let's start with that, then we'll come to the short side. So over here, we're getting the snapback formation. You can swing trade this long. What do we do? Well, we know that we have a long-term or short-term trend in the positive direction. And now we need to just look for engulfing candlesticks. The key to what we have going on right now, and often what you see during snapbacks, in times of volatility, which is absolutely what we're facing right now, you don't see a lot of true buyer sentiment to the top side. And how do you know it's not true buyer sentiment? Well, you have these wicks. See that wick right there? See that wick right there? You have a little hammer formation there. You're just not getting these big green engulfing candles, something that looks like that, because people are basically scared to go long in this market. So can you go and swing trade these up to mostly the 100-day or 200-day moving average? Absolutely, you can. But for me, and why I think these are the best trades in the market right now, and what I'm going to focus on the rest of this video, is the long-term trade. So what we have right now is AppLovin, a trend that is definitely down. You are in the middle of the sweet spot, but you're not in it just yet. You don't really have a true sell short signal yet. What you have is a lot of movement down, and some of you new maybe are saying, well, why didn't you enter it right here? This thing dropped from 520 down to 320. Well, that's great. You can absolutely go and trade that over here on a swing trading chart, trade it on a day trading chart, but you cannot just throw on shares to go short on a long-term chart unless you have the trend all the way in the sweet spot. And another question that you might be asking, well, if this thing has fallen from 520 down to 280, does it have room to go? It seems like it's fallen quite a bit. It's fallen almost in half. The answer is yes. It does still have room to go. Just because something's fallen in half doesn't mean it can't fall in half again. Doesn't mean it can't fall another 70%. It doesn't mean that. This thing absolutely has a long way to go. And here's what we are looking for. See this little flagpole formation over here? What's a flagpole? Well, you had a stock that was here November 6th. All of a sudden, it skyrocketed. And it created this big move to the top side. And it went from, let's say, 168 to 290 in a matter of 2 days. Now, that's great if you're in it long term, but if you're somebody that likes to short, this is beautiful. Why? Because there's no support in here. We talk about it in multiple videos where we're looking for stocks to climb like this. We want them to climb and create these levels of support. So when the stock price pulls back, it stops here and it continues to go. And it pulls back and it stops here and it continues to go. You don't have that. So when you see a flagpole, something that just goes straight up, when it gets to that area, there's no support, it's going to come straight down. So what am I looking for right now? How am I going to execute this trade? Well, I need 3 days in the sweet spot. You might be looking and saying, well, you had an engulfing candlestick here. I did, but I didn't have red and yellow in the sweet spot for 3 days, so I didn't do anything with it. The rest of these, not engulfing candlesticks. So what I'm looking for is this thing to continue to break down, and eventually kind of break this level right here. It's going to break that level. And once it does, it's about, call it 225. When it breaks 225, this thing is going to surge down here to 158. So that's where you can execute that trade. Earnings is completely out of the way. The trend is absolutely beautiful right now. This is going to be a really great trade. It's just going to be exuding patience. If you exude patience on this, you are going to do very well and make money on this trade. Let's go to the next one. Duolingo. What's funny is I didn't even know this was a publicly traded company until somebody brought it to my attention on the live stream. But it's kind of in that similar situation. Look, earnings happened, big fall on earnings. So where did my eyes go? Well, they went right to the trend. And you can see here on the trend, we have a really nice downward trend to go short long term. And what do you notice over here? You have room to go long. So if you want to swing trade this long, you can, but make sure you get engulfing candlesticks. Again, pay attention to this. Times of volatility, you have a lot of wicks here. There's no confident buy signals to get this thing up to the 100-day moving average yet. Now, when we come over here to Duolingo, let's zoom the chart out as always. Actually, let's just pull up the long-term chart. And we can see here, what do we have right here? Well, we have about 10 days where the stock went straight up. And what did we say on AppLovin? Well, flagpoles do not have support in them. They don't have W formations. It'll come straight down. So you can see here, if we just draw a line all the way across like this, I am waiting to break this level right here. We're not there yet, but once this thing breaks this 270 level, let's call it 270, this thing is going to be off to the races. It's going to fall down here to about 213, and you're going to have a really quick profit from shorting something that is super obvious to see. Trend is in the sweet spot. Break this 270 level, get it down to 210, get it down to 208, whatever the number I said was. There you go, profitable. These are very simple ways to look at shorts. Look and say, big trend down, that's number one. Number two, where's the flagpole and how can I execute to get down that flagpole and make money? Now, next stock, Live Nation. And this is a stock that I have been following due to the community, a community member named Hans, since the fall. September. So look at this thing. When this thing started creeping, actually, we started following about right here. It was probably beginning of October. It just kept going and going and going. And we got a little pullback, but what did our pullback show us? It wasn't in the sweet spot. It didn't look like it does today. And it just kept going and going. And I just kept saying all throughout here, pay attention to this thing short. This thing is absolutely going to break down. And that is finally what we are seeing. We're starting to see this breakdown happen. Now, with this one, we have red and yellow in the sweet spot for 3 days. Honestly, I just want to take out this low right here. If I could take out 115, you do have a little bit more of these W formations in here, a little bit, but this thing can very easily come down to about $95. So we can go from 115 to 95 in a very rapid amount of time. And so I've shown you 3 trades so far that kind of all have that same characteristic that I'm looking for. Trend is down, sentiment is against them. We're waiting to kind of hit that flagpole area where we can just fire down. But the most important thing I want you to take away so far is that we all have every single stock is in the sweet spot coming down. Now, let's go to another one. This one might surprise you. It's not the one that's going to surprise you most, but Starbucks. Starbucks is very interesting to me right now. A lot has been going on in the news, both politically, CEO-ly, everything. Things are changing at Starbucks, that's for sure. I'm excited about this one, but I'm also not excited about this one. If we just draw this line across, see right here, and kind of there, and if we take it all the way back here, you can kind of see, what is this? This is just a big consolidation channel. Has it peaked out? Absolutely. Has it peaked below? Absolutely. But it kind of always comes back to this 105 to, let's call it 95 range. But when it drops below 95, it has the potential to get down to 71. Now, will it go back up? Yeah, it'll probably go back up, but it has the potential to get down there. So what I'm paying attention to now on Starbucks, and this didn't happen until this morning on a live stream. We're not there yet. See, we're not there yet. What's the difference between the first 3 stocks that I showed you in this one? Red and yellow are not in the sweet spot. We need red to be in here, which it is, and we need yellow to be in here. And we need to be in there for 3 days. Why 3 days? Because I don't want this to happen. I actually showed this example earlier. I don't want this to happen. Red gets into the sweet spot right here. Yellow never gets there. You have a pullback on the stock, and what happens? It goes up and you are in this thing, and let's say you're losing money and you're losing money, and here, so what's the date here? October 28th through April 11th. Would you be able to sit there and watch this thing be down all that time? Probably not. You wouldn't want to, for no reason. You don't have to. You want red and yellow to be in the sweet spot for 3 days so you have the confirmation that it's actually going to stay in the sweet spot. That's the purpose of that. So we're going to wait until it gets in the sweet spot. And honestly, I think we're just going to wait for this thing to drop below this level. And you might be saying, well, it's still far away. Let's get confirmation. Because by the time this gets below the yellow line I drew, this will be in the sweet spot. Then you're going to have room to run. You're going to get stopped up here a little bit at 86. But what do you notice here? Big gap, big flagpole. This will accelerate down, and it'll probably get down here at about $74 a share. So this one can happen very quickly because a lot of people pay attention to Starbucks, right? I mean, it's one of the biggest global brands in the entire world. When positive sentiment happens to Starbucks, it surges up. When negative sentiment happens, it surges down, and it happens very, very fast. That's the positive and negative to trading Starbucks, but you can make money very quickly. The one that might surprise you, QQQ. This is the NASDAQ. The NASDAQ, I usually don't look at indices to trade. I usually just look at them and say, where are we currently sitting right now? This one's very interesting, guys. It's sitting at a level of very strong support. You can see kind of there and here. You had a peak there. You had a lot of consolidation. And now you're kind of sitting at that level. Trend overall is very down. But what am I noticing about this? There's not a lot of support in here. So this thing can very easily get down here to 450. Then the biggest support level in this market is 441. So this still has a lot of room to fall down. And if it doesn't get there, the absolute biggest support in this market is right here, about 375, 380. And you're probably looking at this saying, well, that's crazy. It can't get there. Well, it absolutely can get there. Is it going to get there? I have no idea. I don't know what they're going to do to this market. But I'm just showing you where the different support levels are so you can anticipate where things are going to go, what kind of trades you're going to make. But if you just zoom this out, this is a very easy one to see. Yeah, you have support right here, but your next big support level is 445. I would not be surprised if we got down to 445, especially with where the trend is right now. So if you're trading on your own right now and you're trying to figure out all of this stuff by yourself, check out my community, which I've mentioned multiple times in this video. Join traders like you who get the exact same chart setup that I have, that get to communicate with me on the regular and get to communicate with each other. You're going to get live analysis that I do on live streams, community support, and access to the Patreon, and you can basically text me anytime that you want to, any questions that you have throughout your journey. Because trading alone, it's really hard. Trust me, I was once there. Having a good process to follow and having somebody there to hold your hand to get through it is absolutely essential. It will steer you clear of very costly mistakes that you are bound to make, and you're going to say, trading doesn't work anymore. It does. You need to have somebody to guide you. Click that link in the description below. There are limited spots available right now. So I just showed you 5 trades, but there is a lot more to this. There is a very comprehensive video that I have made that covers everything that you need to know to get acclimated to trading. It's right here, and you need to watch it. Have a great day.